Hello and welcome to the closing beat, everybody. Happy Thursday to you. How you doing out there? We are financial advisors here at Jazz Wealth, and we like to teach. So you notice that we come on here, we don't necessarily focus on like what we think is the best or whatever. I like to teach you so that you can hopefully go out and learn how to find stuff as well. Or join us at Jazz Wealth if you would like someone to do it for you. While other advisors are playing checkers, we are playing chess. And one tricky one today is international taxation on retirement accounts for a U.S.-based resident, right, that actually has stuff from overseas. So had a lot of fun with that one there. There's some intricacies there that I didn't even know about for this particular country. Anyways, if you'd like help with that, we just want to help you get your dough straight, anything that has to do with that. So we focus on retirement, long-term investments, but along the way, things come up, you know, and you need help. You got a guy that's not trying to sell anything but himself that is happy to help. All right, we're going to do a quick one here today because, well, I got to get ready for Wine and Wealth tonight. Each week we do a class called Wine and Wealth. Tonight it'll be Whiskey and Wealth, if I'm being honest with you. But it's right here in the studio behind me. We have a full-on TV studio with us here that we work from, actually. And tonight's topic is going to be Vault in Nest Egg and the Planner for those of you that are using the Planner. So a little bit of a orientation review and some cool little updates that we can have in there, as well as the cool tips and tricks, as we always do. Well, one man was responsible for the stock market falling today, and it's kind of fun. We're going to look at it here. So let's do it this way. So I'll use the SPY. So if you want to play along, you can look as well. And we're going to go to a 5-minute time period. Right at the old 1 o'clock time period here when Mr. Jerome Powell started speaking. Yeah, right there. That's your day. So we zoom in here. Here's all your action there. 1 p.m. he says, well, maybe, you know, maybe we haven't done enough to bring inflation down. Or should I say, he said, we're not confident that maybe we've done enough to bring inflation down. That's what you get right there. At the exact same time, if you look at bonds, oh no, the yields on bonds went up as well. The time is just a little off on my charts there. Bam, right? Otherwise, we were just kind of hovering around. If we take a look at the day prior to that, I'm going to zoom out just a little bit. Ooh, not that much. So if we look at the day prior to that, we're kind of hovering around flat line, little gain, little loss, little gain, little loss, whatever, and then bam. So it tells you what did we talk about yesterday? The stock market is looking for the next catalyst. We don't have to guess now. We know what it is because of the response that you saw from Jerome Powell speaking. So it tells you also there's nothing else really going on. People are looking at Fed policy as the #1 driver in the short term for the broad stock market. And he said a bunch of other stuff too, but you can check that out if you really care what he said there. And so that hit everywhere across the board right at the same time. You got the NASDAQ doing the same exact thing right at the same time. The Dow initially took it the worst, which they put the headline numbers on TV and, oh no, 200 points, whatever. So you had that. Overall, the Russell 2000 was the one to ultimately take it the worst, the small caps there, because interest rates started going higher, as I just shared with you a second ago. We're going to look over, these are our sectors. I'm going to try something fun here in a second. So healthcare was your biggest drag. You should be able to see it there. 1-day performance. The worst was healthcare, consumer discretionary, REITs, and so on and so on. Communication services finishing positive there. If I go into healthcare for just a second, I do want to point something out, and we're working on some changes here, so this may just drag a little bit. Look at the weak links here. If I click on Eli Lilly, go like that, and you can see all of them in the same drug space, right? So the ball is a little bit bigger. This is our research platform that clients have access to. You can participate too if you'd like. So Eli Lilly being the biggest drag on what was going on there. What did we just talk about? We just literally talked about this. I'll use this chart here for today. Oops, and zoom in just a little bit so you can see. The relative strength names. We literally just talked about that. Even though Eli Lilly, relatively strong compared to the market, it's like, okay, cool, this is a good strong stock, or has been. You couldn't quite buy it. Remember yesterday's game? Pretend you're me. Would you buy something that day, yesterday? You'd be so unhappy with me if that's what happened, or you'd be unhappy with yourself. Today, even the relative strength names fell back, and that includes names like Eli Lilly and the things that we talked about. It was also the sector's biggest contributor to the downside, I might add there. But let me bounce over here real quick, and then we'll come back to that, because I didn't cover the old NASDAQ in depth, right? If you're a NASDAQ person there, or, you know, ETF, whatever you use there, they were hit as well, right? So we talked about that across the board there. remember at this point, right? Basically, if we draw a line right about here, okay? And I'm going to leave it straight, as straight as I can. Nothing interesting about this line other than that's where the NASDAQ is up 40% year to date. When we hit it the first time, we said, hey, is that odd? Is that something that normally happens? No, it doesn't. We looked it up. We're going to do it, actually. So I'm going to come over here. We'll use this. We'll QQQ, just so everybody can use it. Greater than, I'm going to go 35% in a year. And at 30 years won't, that'll just more than cover it here. So let's just take a quick look. All right, so what we're looking at on the screen is how many times the Qs have been up 40% in a year. Over 35%, I'm sorry. So you have 2003, 2009, this is 35%, 37, 2020, okay? It's not common. This is a massive, massive year-to-date gain that doesn't normally finish up there as it did. Now, what's really cool is since we have this data, we can now say, okay, let's just pretend that it finishes somewhere around here. It pulls back to 35% year-to-date. You know what I mean? Maybe it finishes at 41 or whatever. It's possible. Let's look forward. Now we know we're far enough in the year we could say get rid of 1 day, 1 week. What we're going to look at is what happens 1 month after it gains 35% or more in a year. What 1 month would that be? That'd be January, right? It can't be any other month. What happens 3 months later, 6 months later, and 1 year later? So now we can start looking forward to see what we would expect going based on this limited data, I should say. And what's really, really cool, just right off the top of my head here, what's really, really cool is, look, January, after having a really strong year, January is kind of like hit or miss. It might be positive, it might be a little negative. Yeah, it's like whatever. So we're not missing out on a whole, maybe one time here in 2019, big massive rally as we come fighting through or ahead of COVID. But other than that, taking the small amount of data and putting it together, I don't know, it's probably just, it's hard to guess, right? Look at the 3-month time period. In other words, January, February, and March, if we finish as strong as we are in the NASDAQ. It is a tough one. I wouldn't want to guess. It's worse than a coin flip, right? So it gives you now the ability to start looking forward and go, number one, it is rare. Oops, wrong thing. It is rare, sorry about that, for the NASDAQ to finish itself at all-time highs. We would be pretty impressed, right? It would be almost, something that doesn't happen. It would also be really rare for the NASDAQ to just collapse, okay? So there'd have to be something, war, terrorist attacks, things like that. You can't really guess those. COVID, for example. So we know that it's rare for it to go higher. We know that it's rare for it to go meaningfully lower. So what does that mean? Chop, right? Some days look good, some days look bad. You're excited. Hey, all-time highs, we're going to do it. Oh, next day, nope, it's not going to happen. Darn it, I was wrong. So be ready for that as you go into the end of the year, which takes me back to yesterday. I was saying, pretend you're me. You are. You've got your own assets. You manage your own accounts there. Putting all that together, you go, is the tide really in my favor to expect another 30% by the end of the year? No, come on. It's just not in the cards. Is the tide, or is the finger in the wind sort of thing tell me that there's going to be a 20% correction for the end of the year, or even into January, February, March of next year? It's possible, but it's just not something that you're kind of commonly going to see. So I want to focus on that for a second there. I had a little bit of a ramble. I'm sorry. Here's bonds moving lower here today. That's why yields moved higher after the Fed chairman spoke. Like I said, the same thing happened at the same time that he started talking. The whole market, the meaningful weight of the market, only really cared about what he had to say. And until something else steals his thunder, we now know when that man talks, and he doesn't do that, I guess, often, but that's the focus. Fed policy, getting a grasp on Fed policy is what everybody's looking for there. Okay, one other thing I'd like to share with you here, market-wise. Go back. We're going to look at individual sectors. Let's play a game. Remember that the stock market at the moment is dangerously being held up by just a few sectors. That is what's going to determine whether we pull back a little into year end or get a nice little rally. Let's try something here. On the chart, this should animate in some way. We're going to go healthcare, and I'm going to change year to date, okay? So it's green in this case. All right, let's make sure this is accurate. Yep, it's accurate. Okay, healthcare. Well, year to date, it's down. It's not positive, but the stock market's up. Okay, that's weird. I'm going to skip that one. We'll go to REITs. Well, is it below the zero line? Yep. Okay, so REITs are down year to date. Healthcare is down year to date. Utilities, oh, they're down year to date. Materials, almost. Come on, they're fighting, but they're still down year to date. Financials, oh, down year to date. Consumer staples, down year to date. This is more than half of the market. Down year to date, but wait, the S&P is higher. Oh, interesting. Okay, let's go energy. Ooh, energy went from being one of the best to one of the worst. Okay, let's go industrials. Actually, industrials, did they just turn positive? Hey, okay, I'll give you one more. So industrials there. Other than that, they're all negative. What do we have? Let's take communication services. Whoa, look at the gain relative to everything else. Well, that must be where all the action's at. I don't know. Oh, tech. Huh. That's one of the stronger. See the difference there? The broad market's not going up or down. Even today, down day. It's not a broad market sell-off, and we forgot consumer discretionary. A distant third, we'll give it there. Look at the spread between just the few heavy hitters and everyone else. It's kind of like our income diversity here in the United States. Everybody's making a lot of money, and then there's all of us, right? So it's, that's what I'm trying to point out. We have a large group that can really help us through this Santa Claus rally. Just give us a little bit. That's all we need, because these guys are so overdone right now that they're not going to go up 80%. We're not going to have tech just all of a sudden be up 75% for the year. Are you kidding me? We could look it up in the research site. We could see that that's just not something that's going to happen. All right. Yeah, that's what I wanted to share with you. Yeah. Hey, there's a few stocks in the news here. Let's take a look at this. I only have a handful of them. I'll take your questions if you want to get them preloaded. If you have any questions, I'll see what I can do to help you there. MGM earnings easily beat earnings. If you look at their, if you want to look through their earnings there. Occupancy was the drag that probably stopped this from being a positive day. And it wasn't bad. It just missed a little bit. It was 93% occupancy rating. It was 92. Okay, for God's sakes. But because we had weakness throughout the day, because it wasn't perfect, well, maybe that's what did it. Disney obviously had a good day here today. Almost 7% actually on the day. They mostly beat due to their cost-cutting plan. Remember, they were at $5.5 billion. They were going to cut costs by $5.5 billion because the streaming thing is a suck of money. I mean, it's just bleeding them dry. But it's doing better now. They got more subscribers there. So they said, well, okay, we did good trying to save $5.5 billion. Let's make it $7.5 billion. We found another $2 billion we can work with there. So they did that. Obviously very positive there because that helps. Also, if you look at the theme parks, my goodness, you people and your theme parks there. The total revenue at theme parks up 31%. I went once. I'm just a little fraction of that. I went once last quarter, just, park hopping and whatnot. So I'm just a tiny little bit. I didn't buy much, right? I think I probably bought a drink and, whatever. So I didn't spend a lot of money there. 31% at parks. Is now a good time to spend tons and tons of money to go to Disney with the whole freaking rest of the world, right? Maybe not, right? And the subscribers, I already mentioned that. They added more subscribers. Total of almost 8%, 7%, something like that. But good to see, of course, because paid subscribers. We need them to pay stuff there. Other things in the news, not really anything. AutoZone reported. Haynes Brands reported. They did lower guidance. Lyft reported. They did good, just like Uber. So that was pretty good there. I think the stock was lower, though. Take-Two reported, just a mix of different things there. So we'll see. Going into tomorrow, there's really no earnings reports usually on Fridays, and tomorrow's no difference. I think it's Steinmart, maybe. No, it's no, it isn't. What do you call that? Stone Co. STNC. No, who's reporting tomorrow? It's like Steinmart. STNE. Stone Cold. So nobody cares. That's the only one reporting tomorrow. You've got a handful of Fed presidents speaking tomorrow and a couple stocks switching out of the S&P 600 as well as the S&P 400. But other than that, no, Fed presidents will, again, just be the focus for tomorrow. We have a leaderboard. That's right. Guess the Dow. Let's take a look at that one there. Should we bring in Cody and see?
Yeah. Your leaderboard today. We got Gabriel, Mateo, Lene, Noreen and Michael. And if I'm rooting for somebody, it's got to be Mateo. I feel like they've been on the leaderboard a lot over the last few weeks. They just haven't picked up that win yet. So maybe this is their week. I don't know.
Okay. Maybe a ever so slight decline tomorrow for Mateo. Sorry, Gabriel, but Cody's going Mateo.
Mm-hmm.
There you go. All right. That is our guest today, our leaderboard. Good luck to you. The setup looks nice. 4K. No, that's just my skin, dude. I've been eating avocados and stuff, taking my vitamin C. There's no change, right? They said it's all them. It's all them there. What sectors weren't impacted by Powell's comments today? On a minute-by-minute basis, no one. Communication services held up the best, but on a minute-by-minute basis, everything took that little hit there. So, go. What's your favorite ride at Disney? Ooh. No, God, it's a small world. What in the world is wrong with you? Probably the Star Wars, the Rise of the Resistance ride. Or Tron. I got to ride Tron. That was a lot of fun. Yeah, probably one of those two. Got the dog running around back there. He sleeps, and then as soon as the show starts, he gets up and goes. Yeah, Tom's looking at SoFi. So even though the order, I believe his order went through, was reported today. That wasn't a purchase. Oh, it might have been. Yeah, it might have been purchased today. So you're getting a little bit better. I mean, I look at things like this and just don't have the arrogance or the confidence, one or the other, the ego, to assume that I know right around here is the low. The only time I get excited about that stuff is when they peel apart. You know, it looks like a waterfall. So I wouldn't be in a hurry there. Aside from that, so there's two ways to look at this. You could say, okay, waterfall drop. There's actually three ways to look at this. You could say waterfall drop. If that happens, I'm excited. You could say we're at the bottom of the range. I don't know if it will break, but it's there. The previously people bought the bottom of the range. That's the most aggressive thing you can do. And the least most aggressive thing you can do is let it break above the range, pay a little bit more, but hopefully have a lot of that dust and nastiness behind you there. So that's a couple ways to look at it. We did a class for that for our clients. They're talking about multiple ways to buy stocks, you know, where you would look and stuff. But that's, I wish I had a better, better answer for you. Tom, I'm not sure what that question is. Elaborate for me on that, because my immature brain is not understanding. Doc says, trying to decide on what stocks to sell by the end of the year, take some stocks, losses and gains. No, definitely. You got to take a look. If it's in a brokerage account, you're focused on limiting the tax either gain that you had this year or, offsetting the loss or whatever, definitely worth a look there at the end of the year, especially during the holidays when everybody's just sitting around and you don't want to talk to family anymore anyways. Great time to do it. Yeah, grab the laptop, sit outside, have a good thing. Tonight's Wine and Wealth, there's some changes in the vault. We're going to go over the things that we want to hopefully see in the vault to help us further expand the type of advice and planning that we can do for you. And then I'm going to review the planner. So for you, that one's not so interesting. But that will be tonight. Oh, poor people in Las Vegas. Yeah, what a mess, man. It's going to be cool if you love Formula One racing and you love that sort of thing. They do it here in downtown St. Pete, but it's not as, they don't do it like they're doing in Vegas. I don't know, I would watch it. Yeah. And nip is a shot of liquor. It's in Northeast. Okay, good. Good. Yeah, I was going to help you out. So you knew that? Oh, look at that. The young gun knew what a nip was. Actually, when we went last time, we did that food and wine festival. So we tried a lot of different drinks there. I didn't make it all the way around the world with a drink, but there were 4 or 5 good ones. Nothing that stuck out, actually. Do you sell puts when stock prices are going up or down? Well, there's no rule. Like you don't get in trouble if you do one or the other, right? Most people prefer to sell puts as a means to either collect a little premium or acquire a position for a lower cost basis. And so therefore they would want to do it on the way down, or they choose to do it on the way down. If you're really into options, the second reason you do that is there's more juice in the option. The implied volatility is going up because fear, it's a elementary way to explain it, but fear is rising. Therefore, people that are willing to pay for those puts are willing to pay a little bit more because their positions are going down. So you got to think of the other side of the fence there. On the way up, buying puts or selling puts, I'm sorry, you're not getting as much bang for your buck, and you're not able to go as far away from what they call at the money. So I would say most people that do that probably are looking to sell on some kind of a down move. It could be a down move in the middle of an uptrend. Doesn't mean it has to be a cratering stock. It could be just a normal pullback stock in an uptrend. But yeah, hope that helps. Teach you how to be patient on flat days. Yeah. And if you need more help, come grab a drink tonight. Hang out with me in our Wine and Wealth class later tonight. That starts at 8 o'clock Eastern time. Yes, I do work that late. I will be here and it will be live. So enjoy the rest of your evening. Thanks for watching, and, like, subscribe. Does that stuff work? I mean, I appreciate it if you do it, but I just know I'm supposed to say it. So, okay. See ya.